So we're here with Darin, and you see all these people on TV, and they're buying these homes, and they're fixing them up, and they're flipping them and selling them for more money and stuff. But the question is, how do you get a loan, Darin, if you want to flip a house?
Well, a loan to flip a house is going to be a different loan than the loan that you got to just purchase the house that you're living in. Because the one that you got to purchase the house that you're living in is called an owner-occupied loan. Okay. And those you get generally the best terms on because they're the least amount of risk. Okay, so we're going to talk about a couple of other kinds of loans. There's the non-owner occupied loans, and then there's what I call short-term loans. So a non-owner occupied loan would be the type of loan that you would get to buy a home that you would keep for a long time but you don't plan on living in. Okay. So maybe, you know,
like a rental.
A rental, exactly. Okay. Rental. So, and the biggest barrier to those loans is the down payment. Okay. Generally, you need 20% down, but to get the best terms, you need about 25% down. Okay. And your rate's going to be a little bit higher. Expenses are a little bit higher on that loan.
But there's a little more risk to the bank.
There's more risk to the bank.
You don't actually live there and you'd be like, oh, that's the first one I should let go.
Yeah, you got it exactly. Okay. You got it exactly. But that kind of loan is not suitable for a flip because they want you to hold those loans for roughly a year. Okay. That's the idea. That's kind of a long-term thing. So if you're going to use one of those non-owner occupied loans, you want to just go ahead and hang on to that property. Now, if you don't have a big enough down payment, one angle that you could use is if you have a family member that can qualify, they can move into that property, you can co-sign with them, and then they would get owner-occupied terms. Oh. But the lender, again...
So that's like a creative way of doing it.
That's a creative way to do it. Okay. It's totally legal because the person that is occupying the house is truly owner occupying that house, and the lender expects them to be in that home for at least a year. Okay. Okay, so again, those are long-term approaches.
Ideally, they want you to be in there for a year.
Correct, okay. Correct, that's right. Okay, so short-term, so flipping, you want to flip this house, you need some money fast, and you want to pay it back fast. Yeah. So regular conventional loans, FHA loans, do not like to be paid back fast. They like that year.
They like the season. They like to make those
that's right.
interest.
That's right. They like to season.
So what do you do?
So short-term loans, there's a couple of different creative ways that you can find to get money. Okay. The very first one that I always have people look at is if you own a home and it has equity in it, then you're always better off pulling money from the home that you own because you can get the best terms. So a lot of times you can get a line of credit. You could even do a cash.
So you refinance your house, pull the money out, and then you use that as a down payment on your investment one.
Yeah, then you use that to buy your investment property, flip the property, and then put it back. Okay. So that's a great idea.
Or keep it out and just let it revolve into the next
exactly,
one.
Yeah, but at least it gives you that kind of money to work with. Another way to do it would be to get a hard money loan. Hard money loans are designed to be paid off quickly. Okay. So they don't have really great terms. You know, they generally have higher interest rates. Sometimes their fees are a little bit higher. But you can use those loans to go in, purchase a property, get it fixed up, flip it, and pay the loan off quickly. That's the whole idea. Okay. There's a whole bunch of small businesses around, conglomerates of people that offer hard money loans.
Do they have sticks and stuff and follow you around if you don't pay?
Well, it's actually a really good question because if you don't pay those back, then generally they're in a position to foreclose on that property, and they're in a really good equity position. They want your property.
Yeah, so you got to be careful.
Yeah, that's right.
And that's why you got to be you got to be careful when you're dealing in real estate, and that's you got to deal with a really good lender. You got to deal with a really good agent because it can get out of control really quick, and people get really surprised, right? They're like, I never expected that.
That's right.
I thought I only had to come in with 5% down, and I'm going to buy this house, and all of a sudden they come in with 25%, and then they got to try and fix the property up. They don't have the money to fix it up, and now how are we going to get out of it?
That's right. I have a friend actually that's a hard money loan lender, and he always tells his clients, number one, you don't want to do this loan with me, and number two, I can't wait to foreclose on your property because I'm getting the property at 30% off.
Oh, really? Yeah. Oh, goodness. Yeah, so be careful when you're doing that sort of thing. And thanks for coming in, Darin. Appreciate that input.
Pleasure to be here.
Searching down home flyers is so 1980s. If you are ever driving around and you find your dream neighborhood, all you need to do is download Jade's free mobile app. Using this app, you can search for homes, investment properties, and vacant land available using your phone's GPS. What you need to do is text JSLC to 87778. Text JSLC to 87778.